Hello, welcome to Newscentre. I'm Parikshit Luthra. The tech space that witnessed a big wave of layoffs in the last few months of 2022 seems to have no respite. The year has begun on a grim note as global tech firms announced more layoffs in the first 5 days of January than they did in the whole month of December. According to layoffstracker.com, over 28,000 people were handed over pink slips from the 1st to the 5th of January as compared to over 17,000 layoffs in December. Amazon and Salesforce are among the companies that have announced layoffs this month. Shilpa Ranipeta is here with a roundup. Shilpa, how exactly has the tech sector been impacted? Last year, we saw over 150,000 layoffs in the tech industry globally. How has India been impacted?
Well, to start off with, the latest company to hand out pink slips in 2023 has been Amazon, and that's letting go a little over 18,000 jobs. Now, the CEO, Andy Jassy, admitted that 2022's review has been more difficult given the uncertain economy, especially with the company hiring rapidly over the last several years. Now, jobs are being cut across the devices and books, HR and marketplace teams. And of this, sources tell us that roughly 1,000 employees, or 1% of Amazon's India workforce, will be impacted. Now remember, this comes after Amazon also recently shut down its EdTech, food delivery segments in India, among others. And Amazon isn't the only one in 2023. Salesforce is also letting go about 10% of its workforce. That's more than 7,000 employees, and is also closing some offices amongst a challenging environment, customers rethinking their purchase decisions, and again, overhiring. Now, media company Vimeo also is laying off about 11% of its workforce after it had already cut jobs in July last year. Now, reports also suggest that TikTok's parent ByteDance is also handing out pink slips to employees across departments. Now, these companies now join a list of big techs like Meta, HP, Twitter, Cisco, which all laid off thousands of workers in 2022. And the biggest impact has been in the last 2 months of 2022, where in November-December alone, more than 88,000 people lost their jobs in the tech industry. And globally, and the first 6 days of December, remember, if that is any indication, the pain will continue well into 2023 as well.
All right. Thank you very much, Shilpa, for rounding up the layoffs in the tech industry and how this could continue in 2023. To take this forward, I'm now joined by Rupang Chaudhary, Partner and Chief Commercial Officer for Human Capital Solutions at Aon. Rupang, thank you very much for joining us. Not a very good start for the tech sector globally, 28,000 layoffs, according to reports. Give us a sense of what are the skills that continue to become redundant in organizations. Largely, who are these people? What are the skill sets? What segments of the tech sector were they involved in where these job cuts have been happening?
Yeah, very good evening, and thank you for having me here. So I think, Parikshit, the first thing to understand is that what we are seeing happening globally is a function of a bunch of factors. I think if you look at the kind of hiring that has happened, post-pandemic, there was a crazy surge, and a lot of the hiring that has happened now has resulted in bench strength and excess capacity, which is not being utilized. Simply because the whole digital aspect of e-commerce, many of these organizations are in that segment, are struggling to keep up with the digital demand. You can clearly see that global consumer spending has come down in the last few months. We are also seeing a return back to offline models of shopping and sales, and hence e-commerce companies have taken a bit of a hit. At the same time, we're also seeing that a lot of the people who were hired for new product lines or new projects being incubated, especially in companies like Amazon and Meta, they didn't really take off. So a lot of this excess capacity that was built up very, very strongly and very quickly in the last 6 months has struggled to keep up pace with the kind of demand. And it's not surprising that a lot of these layoffs are coming at that particular time. So a lot of these layoffs that we are seeing, globally at least, seem to be for businesses that haven't taken off, for businesses that are focused on the e-commerce space, on digital consumer demand, because a lot of the demand now is going back to the offline models, and hence companies are not really finding space for people to look at this sort of capacity building. At the same time, you have to compare the fact that the kind of numbers that were hired last year in 21 the kind of attrition that we had seen, the kind of increments being given across the world were crazy. It was sort of a bubble which was going to be burst, and it has sort of burst
Right.
now because the demand hasn't kept pace. But very clearly, and I think while your question is largely global in nature, but we are possibly going to see something different in India, because I don't think that it is going to be as widespread or as critical or as chaotic as we see globally as happening in India, because a lot of the local consumption or demand
right.
continues to be very, very strong at this point of time.
You're expecting, okay, you're expecting a minimum impact on India, but as the global uncertainty continues, do you think organizations, some of the big tech firms and even the startups will continue to right size, and this policy of cutting down workforce to achieve profits will continue? And if we were to ask you in percentage terms, what could be the extent of layoffs in the Indian tech industry?
So difficult to give you a number, Parishad, but what I can clearly say is that a lot of these job cuts are happening because of a bunch of reasons. The first and the most important reason is pressure on the margins of companies. That's the biggest reason why companies are cutting costs. Many of these companies also have been well capitalized, at the same time have very strong investors who need to see some sort of an indication of cost control. And a lot of these layoffs are also being done to appease those investors, because obviously the market wants to see some bit of a change or some bit of a mitigation to what is being seen as a very high volatile environment and very strong margin pressure. And at the same time, clearly, because there has been a reduction in digital demand for many of these businesses, that is why layoffs are happening. And as I said, a lot of this was excess capacity that got built over the last 6 months. Having said that, the question to note is that a lot of this talent which will be laid off, or which will, which is at risk, still has a lot of places to go to. We expect talent migration to happen from tech sectors into other sectors which require tech talent. So let's make a differentiation. Many of the stronger sectors which are focused on local consumption and demand, like FMCG, FMCD, life sciences, pharma, financial services, which are more focused on local demand and not necessarily impacted by global recessionary pressures, also have a need for digital talent, tech talent, because the digital journeys are continuing for a lot of these different segments as well. So the demand for this talent will continue, which is why we expect attrition to be very, very high still, lesser than last year, but still very high, and a safe place for this talent to move to, even if the tech talent at this point of time is not able to sustain the kind of high wages that were being paid to these guys. Also keep in mind that the increments that were paid to this sector were very, very high, almost 12, 13%. Now, to keep a 12, 13% hike in your wage bill, especially when there is global uncertainty and recessionary pressures and margin pressure, you have to show a bit of a headcount reduction and rationalization, which is but natural. But a lot of these people will get absorbed by sectors which are looking for tech talent, even if it's outside the tech sector.
Okay, now I would ask you, what skills, according to you, is the tech sector in India and globally looking for? What are the kind of talents, the skills that are in hot demand right now? And those who are being laid off, what is the positive side for them in terms of upskilling and looking for solutions?
So I think the most important thing is that many of these people, as I mentioned, will continue to find a house in places which always need digital or tech talent, right? And a lot of these companies, especially in FMCD, life sciences, pharma, financial services, are still extremely needy for this talent, which is still very, very high in demand. If I try and see the kind of development skills or clear demand for some of the skill sites, I think then clearly is a lot of demand for people in web development, mobile development, cloud development, full stack development, AI, machine learning. Data analytics and reporting is something that has remained extremely strong, extremely high across sectors. Data science, business intelligence, automation architecture, mobile architecture, project management, Scrum Master. Some of these skills remain extremely relevant even now, and some of these skills are being sought after extremely, extremely quickly by some of the other sectors that I have mentioned. See, the fact is that last year we had many sectors
Rupam.
competing for this talent. It was the tech sector, it was the startups, it was the e-commerce, and it was the more traditional sectors. Now what we are seeing is that the startups have struggled to hold on to this talent, as is the tech sector. So now most of these people are making a beeline for the non-tech sectors. The only difference that will now come into play is that they will still be absorbed, but the kind of crazy hikes that we were seeing last year, 35 to 40% hikes, people having 4 to 5 offers at any point of time, that has stopped happening. That will stop happening. And and we expect
All right.
this
Rupank, we're
easing
running out of
off to
time.
happen over 2 quarters. Sorry.
Okay. All right. So you're expecting this easing off to happen over the next 2 quarters, and you don't expect those kind of hikes, that is in the range of 35 to 40%. Thanks very much, Rupang, for joining us. Summing up how you see the layoffs in 2022 and what could be the picture for the tech sector and the startup industry in 2023 as well. We're going to take a short break here on Newscentre, but don't go anywhere. A special conversation coming up with Santosh, Iyer, Managing Director and CEO of Mercedes-Benz India. All right, let's get you a special interview now. Indians may be investing their wealth in mutual funds, but that hasn't stopped Mercedes-Benz from becoming India's largest luxury car maker. The German luxury car company remained the market leader in India for the 8th consecutive year with a market share of 50.6% in 2022. It has the largest retail network for a luxury brand and also the largest portfolio of made-in-India luxury cars. Mercedes-Benz sold 15,800 cars in India in 2022, rising 41%, the highest ever for the brand. I caught up with Santosh Iyer, the MD and CEO of Mercedes-Benz, on the year that was for the company and the road ahead for 2023. I began by asking him about 2022 and what are the growth drivers for the company moving ahead. Listen in.
2022 was a very special year. It was a year of transformation because we changed our business model. We now sell directly to customers via our franchisee partners. We localized an EV in India, which is the EQS, the first luxury brand to do so, plus many other initiatives. And the result of all of that is we have grown by 41%. 2022 has been the best ever year for us, selling more than 15,800 plus cars. More importantly, we have very high customer satisfaction ratings because that's also important for the future. And all these results come at a back of a pending order bank of more than 6,000 cars. So we clearly term 2022 as the best ever year in our 28-year history in India as such.
Right. To talk about the prospects going forward, what do you think will drive growth for the company this year? You've said that you've seen the greatest growth in the top-end segment, but overall, what are going to be some of the tailwinds for you, some of the growth drivers?
Well, I think firstly, let me talk about the tailwinds. You know, we have right now we start a year with a strong order bank position. We have on an average every car line waiting for 4 months to 9 months. So our first priority is to reduce this waiting period because you know customers have occasions, they have weddings and families, and we are not able to deliver on time. So we need to reduce this. So we are working with our production colleagues to reduce this. On the demand side, we also see 2-3 big demographic changes. You know, we have more women buyers buying Mercedes-Benz cars. Our average age for an S-Class has come down to 38 years. For a C-Class is 35. We see a salaried class now increasingly buying Mercedes-Benz cars because that used to be hardly 7%, now it's around 14 to 15%, which also means corporate India results are great. Maybe the employees are buying cars or they're able to afford Mercedes-Benz cars, which is great. So these are all the positive drivers. On the negative side, you know, we just increased our prices 3 to 5% now, 1st of Jan. The exchange rate, the euro to rupee doesn't look great at this stage. Last 6 weeks has been bad for the rupee. That gives us some shivers that we have to again take next level of price increases. Would that dampen the sentiments? Would that dampen demand? We need to wait and watch. So these, and of course the entire logistic concern has not gone away. You know, the supply chain issues because of geopolitical issues in the Europe, or you know, the energy crisis, and also this COVID lockdowns, which also means that the supply will be affected even for 23 to some extent. So these are some topics which keeps us awake. We need to work on this. But overall, when you look at the demographics, when you look at the overall macroeconomic development, you know, the tax collection is high, stock market is doing well. We still feel that a double-digit growth for Mercedes-Benz for 23.
You had recently said that for Mercedes-Benz, the biggest enemy, the biggest hurdle to growth is SIPs. There was a big debate over it. A lot of people felt that that really cannot be the case. So why did you feel so? And do you feel that that argument is still very relevant in 2023?
See, first of all, SIP is an acronym for savings, and I think the mutual fund industry has done a great job in really equating savings with an SIP, and we see the results, the amount of money which comes every month into the markets with small savings, and that's a great, indicator of saving potential. Now, the comment was made in a context, what will it take for the luxury market to grow in the next 3 years' time? And it was not particularly to Mercedes-Benz. But let me come to and clarify this. Today we have 41% growth coming from this YOLO mindset. We have a lot of customers who feel let's enjoy life, let's buy luxury cars or even watches or even any other luxury consumption. And then there is another segment that we come across where they have the wealth, they have the money, but they don't spend yet. And these guys, they continue on savings. And as I said, SIP was more of an acronym for the savings, that let me continue to save, maybe of an uncertain future, maybe of the uncertainties around, maybe for cultural reasons, because I still don't want to splurge. And we can see many wealthy individuals, HNIs, ultra HNIs, because when you look at the ratio of India's ultra HNIs and HNIs to car sales, it's quite less compared to many other parts of the world. And the only explanation is that they try to drive more savings as such. The comment was made that for an economy to grow and for also the markets to grow, consumption and saving both need to go hand in hand. Only when people start buying produce, the stock market also grows because of it's directly correlational to each other, and that was the context. Having said that, what we feel is there is a demographic shift happening, which I mentioned earlier. There is consumption patterns which are changing. This cultural pattern of shifting, and trying to spend on oneself, spend on today and not just on tomorrow, I think would take that time. But there is no indication that people have to stop savings and start buying luxury cars or luxury products and stuff. It is about people who can already afford because they have already a huge wealth with them in terms of savings done in their, you can say, career or in their lifespan. And why don't they upgrade to now luxury products? I can give you another analogy. You see in airports in India, you don't see any luxury outlets. You don't see some of the luxury brands in airports and what you see in Europe. That again is an indicator of low consumption. Not that people don't buy watches or handbags and stuff, but it's just that the consumption for luxury goods is still to take off much more significantly. And this will happen with economic factors and socio-cultural factors in the next 3 to 5 years' time. So it's nothing to do with immediate prospects.
All right. So you also feel that the consumption pattern where you see people focusing more on savings, spending less on the luxury segments, luxury cars and luxury goods, that still exists, that persists.
A segment of people, as I said, this year, if you see, we grew by 41%. This growth would not have been possible if the people were not spending on luxury cars. We have 6,000 customers waiting to get a Mercedes-Benz.
Yeah.
So there is a segment of people who are splurging. Then there is another segment of people who are not. Maybe if they are doing, they may buy an E-class instead of an S-class, or maybe a C-class or an A-class instead of a C-class, because they feel fine. I am fine with this car. Maybe I don't need the top-end vehicle and stuff. So that's also a segment which exists. So it's not that in general we can categorize that the entire market is only on the saving mindset. Because if that was the case,
so what would be the segment, the age group, the category of people who are holding back, according to you?
This is
the SIP category.
It's the 45 to 60 more, which is actually holding back.
45 to
60, which is holding back. They have the wherewithal to buy. They have the bank balances or the so-called balances to buy the cars, but they hold back and they wait. Also, cars in India or, luxury consumption is conspicuous generally. And this is something that is clearly visible. So that's why I said it's a bit of cultural topic, and not that one has to consume. It's also not that we are suggesting that consumption is the way to go in. But we just feel that there is a higher ratio, and that explains the ratio of millionaires to luxury cars sold in India. This ratio, India is one of the lowest when you compare to any other markets in the West or any other market in the world.
Oh, okay. Now coming back to the prospects of greater localization in India, making in India for the world, what is holding back Mercedes-Benz? Do you think FTAs, if the India-EU FTA goes through, could that change things? about the way Mercedes looks at India?
See, first of all, FTAs are good because it drives economy holistically. You know, there is trade both ways. Borders are opened up, and that really helps. So we will definitely always support any FTA in that perspective. Now coming to manufacturing, because what will happen if FTA comes up? Now manufacturing is as far as we are concerned, we generally make cars closer to the market. So we have plants in Europe, we have plants in US, we have plants in China, and most of these plants. And this is because we get efficiencies due to the logistic cost. See, these are big cars, and to transport them from one continent to the other, whatever savings we tend to do in a certain market will all get eroded in some of them. Secondly, the logistic environment itself, within the country, outside, also will have to change. So I think the current initiatives are great in terms of improving overall road infrastructure, ports and highways, so that's set up. With FTA coming in, we will reevaluate for sure on what we can do for the local market, because that also opens up free market access for many of our car lines. For example, this is a CBU. This can also come easily to India. And then what can we then send it back, maybe to a Europe or to other country. But it's all about ifs and buts, and it depends on when it will happen and the fine print. Yes. Okay. Because FTAs also doesn't mean zero duty. Yeah. Maybe there is also certain tariff.
But what kind of tariff reduction would you be seeking?
See, today CKD kits, what we produce, has a 15% import duty. So it's only for the CBUs where the import structure is significantly higher, 110%. So for doing a CKD business, it's the 15% that we do and the duty that we pay. And that 15% will go away when it comes to I would say duty rationalization or FTA, and that's the cost advantage which one can pass on to the market.
Okay. I'd also like to ask you about any policy measures where you're engaging with the government on currently, especially on import duties or any other ease of doing business measures.
I think we are discussing on 2-3 counts. One is we want policy consistency. You know, one of the major drivers for India would be the GST benefit on EVs. This not only helps us, but also all Indian manufacturers for faster adoption of EVs. We just hope and we feel that this should be continued at least for next 5 to 10 years, so that we are able to transform the market from combustion engines to EV, which is not only sustainable, but also helps for our import bills and many other topics. The second topic, so apart from the policy consistency, is the regulatory environment. So India actually has one of the most stringent regulatory environments when it comes to now, EVs or certification or CAFE norms, which doesn't affect us personally because all our cars are fully compliant. Even with the current CAFE 2 norms which comes in, we have already mentioned that we will continue on diesels in India. And we are fully compliant on that. And the last is also from a legislation perspective, faster, judicial reforms, if we can expedite many of the judicial processes. But that's more of a higher order wish list. But for ease of doing business, I think we have been in India for 28 years now. Last year was the best ever year for us. And it's also for us to learn to do business in markets based on what the market conditions are.
Right. My final question. What kind of growth do you see in EVs in this year?
See, I can give you from our example.
And your overall sales growth that you expect?
Yeah, so from our experience, when we launched the EQC 2 years back, in fact 2019, start of 2019, we said it's an experiment, let's see what happens. And our bookings were much higher than what even we planned for next 2 years. So then we changed our portfolio, but then by that time COVID happened and all the issues. This time around, we decided to localize one car and one car in CBU. Both the cars have a waiting period of 4 to 6 months. Again, proving us that we undercalled the market than the potential. So we feel customers are ready. We need to work on the charging ecosystem. And that's the reason we set up the fast charging ecosystem. We have now the largest luxury EV charging network in India. Because that's one anxiety still. Everybody says, can I go intercity? Though they don't do intercity every day. But for that day when I travel, say Delhi, Jaipur or Bombay, Goa, I need charging. So as long as we are able to take care of that, I think the market is there. I think I said this earlier, that next 3 years we see 25% of our sales will be EVs in India also. But for all of this to happen, also for the overall market to grow, I think it's up to the manufacturers to introduce more products at the right pricing. We have seen that with mass market. We have great examples in mass market where EVs, if the portfolio is there, it sells, and there is a huge waiting period.
So what is the current percentage? How much could it go up to?
So currently, see, we started deliveries only in November, December. So it's too early to call a percentile because it's 2 months of sale compared to the year. But I think we will be in the region of 2 to 5% as we start now the next year, this year. and in 3 years it should go to 25%.
Overall growth, what kind of growth do you expect this year?
Double-digit growth, as I said, because from a tailwind, as I said, demographics and the order bank, but the headwind is the price increases which may come, and we don't know whether that will dampen up demand. So we are cautiously optimistic with a clear double-digit growth projection.
All right.
Okay, we have the first advance estimate.